Good morning, trading world. It is November 9th, 7:44 a.m. and this is my pre-market outlook. Today's theme is much to do about nothing. Yesterday was kind of a, humdrum, somewhat boring day, or uneventful day, I should say. And we may get pretty much the same today. However, the ranges that we partake in aren't all that boring, but it is or may possibly be another uneventful day. And that range, as long as we stay inside of the 470 to the top side and 464 to the bottom side, it should be pretty uneventful. One of the reasons that it may seem somewhat eventful is that for the SPY, this is a pretty large range. But when you kind of back away from it and look from a higher view, you can see that momentum is being fought over on a higher time frame. So that's why we have the larger ranges than our normal intraday small ranges so far. Before we get to the scenarios of the day, things to pay attention to. As we all know, Tesla and nvda have been in pretty much gamma squeezes all last week to the upside, taking the Qs and to some degree the ES for a ride. And it seems as though the call buying in these stocks causing that gamma squeeze is losing steam. And as far as I can tell, as of yesterday, market makers are starting to rotate into different stocks in the tech sector, in that same sector. So instead of seeing rotations out of tech into healthcare or into financials, we're seeing that money stay right within that same sector. So something I kind of noticed is that even though activity decreased in Tesla and nvda, activity increased in Google, Amazon, Microsoft, and Facebook, setting up what I call a musical chairs type of event in the future. And we all know what happens when the music stops in musical chairs. It can get ugly. So that's something to pay attention to, that rotation around the tech sector and seeing what is happening there. I still have my eyes on financials. With the rise, or I should say the fall in rates, the financials have been kind of holding up at the top of their range. A couple days ago, I thought all the activity around the 10-year and some of the other rate products, I thought it would have an effect and kind of knock back on the financials a little more than they did, but financials kind of held their ground a bit. So again, that's something to keep an eye on as the yield curve kind of flattens and we get the longer term rates coming in towards the shorter term rates. All right. Now for today's scenarios, the highest probability scenario that I have today is another range day setup. The high of the range around the 470 area and the low of the range around the 465, 464 area. And we should get ping pong back and forth between those two areas. And let me set that up on a chart on how it should look. All right, here we are with scenario number 1. Again, a range day type setup. We have the range high somewhere around the 470 area, range day lower around the 465 area, and basically all we get is ping pong in between the high and low of the range. Doesn't matter how it goes, how we get there, where it starts, is pretty much just ping pong in between these two areas, whether we start up and come down and chop and then make our way back up, or coming down, chop and making our way back up, and then seeing a retest of the lower part of the range. Either way, a range day setup is the highest probability scenario that I'm looking for today, which kind of coincides with the theory another non-eventful day, even though we have quite a large range. So it's going to be easy to kind of make money fading either side of today. I prefer to fade the top side by getting up here in this area. I prefer getting puts, intraday puts. We're going to use Wednesday's expiration as close as we can to a 50 delta to take advantage of the drop. And once we acquire or get near the target, we will exit all of those today. And on the top side, it could be played pretty much the same way by buying calls, Wednesday's expiration calls as close as you can to a 50 delta, looking for a ride back to the top of the range. That's how we could play the range day setup. So that's pretty much it on the range day. And let's see if we can't get set up for scenario number 2. All right, here we have scenario number 2, which I'll call a range day or rounded reversal day type setup. And in this setup, we open gap down below yesterday's close of 468.93. And in the range day setup, we just kind of keep going. We open up gap down. You've heard of what's called a gap and go. It's that type of situation where we open up and just keep gaining steam to the downside. Excuse me for one moment. But yes, we gain steam to the downside, head toward our target. We will probably see a little support at 465 and a half, somewhere around there, which could likely be broken. on the way down to the 464 area, where we'll see our midday chop before gaining steam and having just as a powerful move back up to the upside. So that's the change day setup. Again, things to keep an eye on in the change day setup: watch the internals, watch the indicator, because if we are gaining steam to the downside, you should see divergence in your indicator or internals the entire time. A few minutes after the open, we should see that divergence where, as we're gaining steam to the downside, your indicator is actually trending however so slightly to the upside. So that's the thing to keep an eye on for the change day. And you also have to be careful, because there are instances where we could have that very setup with the indicator and indicators trending up ever so slightly the entire day, but that move back up to the upside, it may not come. It could come after hours or right at the closing. So that's another thing to kind of be careful of. And usually, if you're paying close attention to the internals, it'll kind of signal a move like that by giving you a false, I want to call it like a false kickoff. Those of you who follow tick, you may understand what that is, or see it. But it's a bit much to explain right now. But that's the thing to be careful of. And in general, right now, the market is having a lot of trouble. It's already showed us that it is having so much trouble pricing in risk. It is in a very inefficient state when it comes to pricing risk. So that's a factor in how these days play out, and it's also a factor in it being very hard to kind of put probability on the day types that we're having, because everything is so inefficient when it comes to the market right now. So if you're going to get a surprise, it's more likely to happen in this type of market condition. So you have to be on your toes regardless right now. So even with the range day, the change day, you have to be on guard and just kind of see what's happening right there. And these setups are somewhat hard to come by right now, because the market kind of plays tricks on you. So you have to be very careful right now. Let's go to the last scenario. All right. And the third scenario with a 25% probability is the downtrend day. And the clues and easy part of identifying this happens within the first 20, 25 minutes of the trading session. We'll open up, gap down, and we'll try to close the gap or go back and fill the gap. And before we make it to yesterday's close of 468.93, we'll find resistance and turn over and start the downtrend of the morning. and it'll be pretty persistent. The way that you can take advantage of the downtrend intraday is going to be pretty much the same as all of the intraday trades, by taking advantage of close to expiration puts, which would be Wednesday's expiration at a 50 to 60 delta put. By catching that right here as we go into resistance, or as we find resistance here, that's when you want to place those puts on and look to ride down to pretty much lunchtime, or that midday area. Once we get to that 465 area and we find our first support, you want to start jumping out of those puts right then, and don't give them a chance to kind of give that value back once we reach that chop area. So that's how you take advantage of a downtrend day. So those are the scenarios for today. Again, like I said, be very, very careful. Understand your risk. At this point, there is so much more risk below us than above us. And what that means is be very, very careful in taking long positions, because long positions could blow up in your face. They have a higher degree of happening that way than a short position right now. But we're in that kind of area, that choppy range. Don't forget that this is, we are in the midst of a blow off top. So there could be a little more activity to the upside, but this is that choppy area. Like I said, the bulls and bears both are fighting to take over this momentum or shift momentum. So you have to be very careful around this time. That's why most of the activities or positions that I'm taking right now are only intraday. So you have to be very careful right now. And if I am taking moves, swings right now, which are to the downside on most of the indexes, I'm using put verticals to kind of soften the damage, just in case it blows up, comes back in my face. So again, know your risk, be very careful. Wishing you luck in your trading. Have a great day.